We're talking about this Newsweek article and Texas facing a major housing correction. Robert, before we get into the numbers, are you agree or disagree? Just what's your hot take?
Oh, well, my hot take is that anything that's a big headline in a news article is usually going to be a little bit exaggerated. So, yes, are we having a soft moment in the real estate market? Yes. Is it expected? Yes. Is it rates too high? Yes. But we're not seeing any kind of 2008 distress yet.
Welcome to Silberman Realty's Property Desk podcast, episode 1, where we talk all things residential real estate in Texas. Today is May 14th, 2025. I'm Phil Silberman, owner of the company and the host, and I'm joined by my co-host today, Robert Vernon, who's a real estate agent with Silberman Realty. How are you doing today, Robert?
Doing good. How are you doing today, Phil?
I'm doing well. Kicking off a new show for us, not new to podcasting. I've been doing the weekly docket over at the law firm, Silberman Law Firm. I'm also a real estate lawyer. And so, yeah, we're kicking off this new realty show. We're going to talk about all things sort of residential real estate in Texas. That could be property brokerage, property management, do some market updates, investment tips, and that kind of stuff. Show's name is Property Desk. That's D-E-S-K. What do you think of the name, Robert? I came up with that one on my own.
Perfect. You did great.
Good. That's what I like. That's what I like to hear. I asked my wife about the name today, and she gave me like a math look. But
That's a typical wife just answer that you would get from them. They don't want you to feel like you got too much credit.
Yeah, there you go. You've been married a little while. The name actually pays homage to the old days. And we had a property desk in the old days. I've been in real estate for a while now. And I thought of it because I hired this one real estate agent many years ago, and he was already old at the time. And he sat down to take calls at the company, and he picked up the phone, and instead of saying Silberman Realty or whatever, he said Property Desk. And I was like, what is that? And it turns out that in the old days, all the guys would be sitting at a desk. Have you seen the movie Glengarry Glen Ross? You that movie, Robert?
No, I haven't seen that one. No.
Robert, you need to immediately go see that. I
put it on my list.
I cannot officially endorse the movie Glengarry Glen Ross because you couldn't make it today. It's that offensive. There's this one line in it. They're doing it on Broadway. It's on Broadway through June. And Alec Baldwin's in it. Al Pacino's in it. Not the Broadway, but the original movie. Alec Baldwin, Al Pacino. Just got an all-star cast. And it's all about incredible cast. And it's all about real estate agents doing sales. And the whole thing is they want the Glengarry leads. And they sit around in a room. They've got a desk. And that's what they did. Al Pacino, Alec Baldwin has an incredible monologue in it.
You're jogging my memory. I've heard about this movie. I've heard this whole story before. So now that you're bringing it all up, it sounds like I need to go see this movie. This is the second time I've heard about this now. So I'll get on that.
After the show, you need to go watch the movie. Okay, but we don't want to take too much of a tangent. Property Desk is the old days. You'd have this MLS book. And when my in-laws came to Houston to buy a property in 1970 something, they had a realtor take them around, and the realtor had the book in the car. And that's how they would do it.
I'm so thankful I wasn't born in that era. How terrible would it be to have to do all that with all the maps that you have to grab? Maps taking you to the wrong direction. Next thing you know, you're on a street you didn't know you were going to be on. Your whole day shot, all for 3 shows. Yeah. I didn't know how they made money back then.
We had a key map, and they don't have that in any other places. But the key map was the big thing in Houston. But
sometimes I'm getting old, but I'm not that old yet.
No. So we named the show Property Desk, okay? And when you come up with a show, there's tons of podcasts out there, right? So you want to be sure there's all kinds of property line, property chatter, property whatever. And a lot of those names are already taken by people doing similar things. So I Googled Property Desk. I could not find anything except there's a Keller Williams office, Robert, that still has a property desk. And they advertise to their new agents that they can come in and take calls from prospective buyers that might want to look for real estate. That's how we got the name of the show. But another little tangent, Robert, you've been in real estate a while.
Going on 15 years now. Yeah.
Yeah, you've been a realtor a while. Do you think if you worked at Keller Williams and you were a new agent, do you think going to sit at the property desk and taking buyer rep calls, buyer rep leads, do you think that's a good way to get started?
I think if I was a new agent, I was in a city, I didn't know a whole lot of people, that's probably the only way I'm going to get my leads. I don't know anyone. I'm going to compete with everybody else around the city. I'm only going to be able to get the leads that, hey, I'm just calling my local realtor. I just need someone to do it who knows nothing about real estate. Usually your best lead, because you don't have any like preconceived, situations that they've had in the past where they feel like they know what they're doing, or they actually want to step on your toes and on your expertise. You get that a lot with the seasoned buyers, and those types of folks don't call the property desk. So yeah, you could be going through a lot of what you used to do, like cold calling. You'd go through a lot of stuff. It wouldn't work out.
This way, you've got the leads coming to you. Now,
Yeah.
I want to bring up one point. About 2 years ago, 3 years ago, just after COVID, when we had this COVID rush of buyers buying things and there was a shortage of supply, I was asking you and another agent, "Hey, you guys, how are you guys working on these buyer leads?" And you told me like, "Absolutely not.
No, no way.
There
Back
was no."
then, I felt bad for agents. It was just so brutal for them. We were listing agents, and as soon as we would hit the button list, I would almost stare at my phone and just wait for the phone to ring for agents ready to show the property. It was madness. And so you would have 20, 30 showings in a day lined up. Why would you want to be a buyer's agent in that market? You're going to have to basically just bend over, give the seller everything they want just to be considered. And then it was brutal. I saw it from the other end. The way our business is set up, we did a lot of listings. We're a property management company, so we sell a lot of properties that landlords don't want anymore. That was the easiest time to be a listing agent, was during COVID.
Yeah,
And people were
yeah,
just buying everything hand over fist.
So what I'm hearing, if you're potentially thinking about being in real estate, or you're a new realtor out there, or you're a buyer and you're thinking about calling up and getting some help from buyer's agents can spend a lot of time spinning their wheels.
Oh,
So
yes,
you're
very
gonna
much.
someone's gonna call up. They're gonna say, "Hey, go show me a house." You're gonna rush out to show the house. You're not gonna have a buyer's representation agreement. You're
In
gonna show them
2021,
a
you
house.
weren't, but now you have to. The new rules,
Okay.
which are really hard to manage, because, oh, what? The National Association of Realtors doesn't even want me to open a door for anybody without discussing compensation. What buyer wants to do that? They even decided they bought the house yet.
You
That's a whole,
No, that's a good point. Robert's referencing a time where you would just go out and show agents, and now under these new rules, the realtors were sued for this whole commission thing, and then that ended up requiring sort of buyers to get a compensation agreement because we were worried we're now not automatically going to be paid by a seller, which was considered anti-competitive.
yeah.
So
And
now,
now
if you
you talk
represent,
about a buyer's agency being difficult. Then think about it now. Now you got a list of homes that you have no idea what you're going to make commission wise, because it's not advertised on the MLS. So you're just out there
you know,
blindly working for free, essentially, unless you are going to put the screws on your client, the buyer, to pay you regardless out of their pocket. You've made the situation so awkward for buyers agencies. And I understand that you can get through it. There's ways to talk through it. The seasoned agents can. And I think it will bring out a lot of the weekend realtors will disappear because of this. Um,
you know,
but it remains to be seen. It's still fairly new. We haven't even done this a year.
Now, if you're a buyer's agent out there and you're working a property desk, I think our advice to you at this point is, my advice would be, look, show one or two houses if you want. Definitely at that point, if you start discussing a property, give them the information about brokerage services. But after the second house, you need to have your buyer's representation agreement ready. And you need to be able to have that awkward conversation about compensation, because you're not getting this automatic commission payment anymore on the seller side. So you're going to
Exactly.
have that conversation, tackle it early. And then after that, when you're showing all these listings, you need to be asking the seller's agent, what commission are you paying? And get that transparency out there right away. So that is what it's like to work a property desk. You can still do it today. Robert's given some great tidbits for new realtors out there. If you're new to a market, go work a property desk, find a place that's got some buyers leads coming in. You can do it. And this show, Property Desk, is a little bit of a nod to those hardworking buyers agents out there, and some of those old school realtors that know what it's like to be into Property Desk. And it's also a plug for the Glengarry Glen Ross that's now on Broadway. Go see it. I think it's running through June. The tickets are very expensive, but all right. We have digressed a little bit. Let's talk about what we are actually supposed to cover on the show today, Robert. And we are covering some real estate news. We got a real estate news section, right?
Okay.
There was a Newsweek article this week about Texas facing a major housing correction. That's where we are, Texas. So we're going to talk a little bit about that. And then we had the CPI print yesterday. That's this consumer price index. We're going to talk about where inflation was and how that affects mortgage rates. And then in our Let's Get Legal section, which I'm uniquely qualified to talk about as a lawyer, we're going to answer some realtor liability questions on buyer's agents, again, maybe giving some feedback and how that might land you into the hot seat, into some legal trouble. And then we'll go ahead and close the show and we'll call it a wrap on episode 1. So let's go ahead and get it kicked off with our real estate news section. We're talking about this Newsweek article and Texas facing a major housing correction. Robert, before we get into the numbers, are you agree or disagree? Just what's your hot take?
Oh, well, my hot take is that anything that's a big headline in a news article is usually going to be a little bit exaggerated. So, yes, are we having a soft moment in the real estate market? Yes. Is it expected? Yes. Is it rates too high? Yes. But we're not seeing any kind of 2008 distress yet. As long as the job market stays pretty elevated, you're not going to see that distress selling. Now, we do have a lot of inventory showing up now. I think a lot of people, we've had interest rates high now for, I don't know, we're going on 2 years? So a lot of fatigue, a lot of seller fatigue waiting this out. When are rates going to come back down? People are finally starting to put their homes on the market. We got to the election cycle. A lot of people are trying to get through that. Now people are wanting to see what's going to happen here. Trump keeps trying to tell the Powell, Jerome Powell, lower rates, but the bond market keeps going up and up. And so we're at this point at the 10-year treasury yield that really is going to decide the housing market, in my opinion. We're sitting at 4.5 right now, which has been really the resistance level. And if we bust through that, that changes the interest rate game. You could really start seeing the housing market start really coming down if we get above that 4.5 on 10-year. But
we're not okay. Well, let's stick to the headline though. We're calling this Texas facing major housing correction. Robert is saying that headline is overstated. Robert's saying it's overstated, but but I think you're right, Robert, because you're only seeing like a 1% price reduction from last year in the actual pricing. Now, Robert said that, okay, our inventory is up and maybe that price reduction, there's a lag there and we're going to see more price declines year over year. But our inventory is up right now. But Robert, we're not calling it a major housing correction like Newsweek is calling it, but we're saying we're starting to see some cracks in the armor.
Sure. Usually, the thing about these news articles, journalists and stuff, they looked at historical data. Okay, 2008, we saw inventory climb. Oh, so what's going to happen next? Prices are going to fall. We're not in a 2008 style environment. Not all one size fits all. History sometimes rhymes. It doesn't always repeat. And so I've learned through my 40 years of life that these news articles will love to just grab you with the biggest attention grabber. And sometimes being the contrarian to them is the way to go.
Yeah. And here's the numbers, okay, that Newsweek is citing. They're saying listings hit 123,000 in Texas. That's 53% higher than normal. We don't know exactly what normal is. That's hard to define.
Yeah, where is normal?
You're going to have a very
we had no inventory during COVID. Right. You know what I mean? So we're going to have an increase, right?
My definition of normal would probably be like 2019. That would be like a balanced normal market. So if we're talking about 53% higher than 2019, that is a little bit scary. If we're talking about 53% higher from 2021 post-COVID, that's a very
well, does the article say where the average is coming from? They probably omit that information to make it look more exclamatory.
Yeah, Newsweek can be a little bit sensational. All right, here's the other claim in the article. Okay, fourth most oversupplied housing market in the U.S. Again, how do you define that? I think we can, Robert. I think we can collectively say on the Property Desk on this show that there's some weakness. Florida is tanking. If you want to buy stuff in Florida, go to Tampa, go to these places. Very soft, especially Robert condominiums in Florida because Florida remember that condominium that collapsed in Florida?
Oh yeah, it
So that
completely
caused,
rewrote their whole laws. And so they had to put all these HOA like assessments on these folks, and they couldn't afford them. And that with
yeah.
the insurance costs, Florida's isn't in an absolute own problem, right? Yeah.
And some similar stuff we're facing in Texas with all the flooding and the hurricanes and the insurance rates. People moved to
Constant
Florida during COVID.
hailstorms. Yeah, man, it's
Yeah.
awful. It's every time I hear a roofer going through a neighborhood trying to get everybody to replace the roof, all I keep thinking, oh man, everybody's insurance in this neighborhood is about to go up because of this. And it's the breaking.
People moved to Florida, okay, and from the East Coast thinking, all right, this is going to be affordable housing and it was cheap and we're going to live the Sunshine State life. And then 3-4 years later, fast forward, they're finding they can't afford their insurance. That if they can get insurance, and they're being priced out of the market from a cost standpoint. So
But still,
there's a whole lot.
it's just not Florida. Texans. I'm seeing it all over social media where you'll have people move to Texas thinking that same thing and realizing it is a
Yeah.
lot more expensive in Texas than the headline reads, especially now.
Yeah.
I think Texas was affordable. It is no longer affordable. There's still a big segment of the population who thinks it is. And it's not as affordable as it used to be. It's definitely caught up with the rest of the big cities and big states with
That's very true. In fact, Texas saw a net migration. We're going to get to net migration here in a little bit, but so Florida's down. Austin is the softest one in Texas. Probably you've got inventory up 25% there. Austin was the biggest boon for COVID coming in and people moving there to Austin. So you're having a big correction in Austin right now. And then Denver, I didn't know anything about Denver, but they say Denver's also very soft. I guess a lot of people moved to Denver or that area during COVID as well. So we're seeing these COVID reversals now.
there was an immigration problem in Denver. The city's really just been overspending in the wrong places. It's on the verge of bankruptcy over there. There's a lot going on in Denver. Downtown's pretty desolate. It's not a very safe city. It really took a dive since probably like 2020. So really hope they can do this around over there.
Denver's hurting, so that makes a lot of sense. All right, so let's talk about the why. Why do we think there is a correction in Texas? And here's the suggestions from the article. You had a wave of new construction, and that's now being sold as resale. Robert, are you seeing that at all? Are you seeing
not only is it being sold as resale, you're seeing new neighborhoods that did not sell just turn into rental neighborhoods. Brand new construction. They won't even sell them. They're just turning them into straight rentals. That's actually become pretty popular. Yeah.
Okay, now some of that's with purpose, where the design build to rent kind of thing, but I did not know that. That's very interesting. And Robert, you're in the DFW area, I'm in the Houston area. We build farther and farther out. And if you've got a neighborhood that's being developed and that's a soft market, you're seeing builders, or not builders, but investors come in, scoop those properties out and turning them into rental neighborhoods. Is that what you've seen?
They were naturally doing it before. So you would have a wave of investors where the math worked in a neighborhood. And next thing you know, almost every single house in that neighborhood is now owned by an investor. I don't know what changed, and it's not just in the Texas market. I'm seeing it online in California, even in the luxury markets. Builders are building higher quality homes to be leased out now because they have to continue to build. That's their business. And they've got to get some income on it. And they may just kick that can down the road to see if rates come down, lease it for a year or two, and then sell them as resale homes in the future. This is a newer concept. We haven't seen this before. We saw it in 2008 with the condominium market, where they built a bunch of condos in the big cities. You had the housing collapse. They turned them into apartment buildings. So we've seen it before, that aspect, but we haven't really seen it in single family homes before. They say we have a housing shortage. Who knows?
Yeah. And if you're in the business of building in far out places, once you build and you're a buyer, you're attracted to shiny, and that's what you can afford, you go out there. If you lose your job and you need to sell that in 2 years, you're now competing with other new home construction being offered by builders. And builders are much more willing to discount, much more willing to take losses, get properties off their books than you can do because you've got the loan. Maybe you put 3.5% down. So you don't have a lot of wiggle room before you get upside down in that new construction house you just built. If you're selling it 2 years later, and now you need to unload the house, you need to sell it because of something life changing,
I typically
and now
tell people you need to be in your new construction home a minimum of 5 years. If that is, you could be caught upside down because it is very difficult to sell a house in new construction. Some new construction neighborhoods, like these mega construction neighborhoods, they'll take 10 years to build out. So you could technically be competing with new construction for a long time. However, traditionally, if you're one of the first people at a new construction neighborhood, you're at that first price point before they do any price increases. So it really helps you. If you're stuck in that middle to the end of a new construction, you need to have a 5 year plus price horizon usually.
And if you can afford it and if you can afford it and you don't have to buy new construction and you think you might have a shorter time frame, you're probably better off buying more valuable land where there's not a lot of opportunities for builders to come in and build. If you're looking to protect your investment, protect that asset and not be subject to some price decline. So just a little kind of hot tip for you there. If you're a buyer and you do have an option between new construction, shiny, and existing resale where there's not a lot of land around, the safer play is to always go with the more valuable land. All right. So other reasons that we're talking about maybe a housing correction in Texas, we've got, I don't know if Robert, you saw this. We covered this on the weekly docket over at the law firm. We've got a decline in migration into the state. Now, I'm not talking about illegal or undocumented migration.
No, just state migration into the state.
Right?
Yeah.
Right.
You gotta look, we had a boom into Texas for 4 years straight. You've got to pull back. You can't have that many people constantly moving for decades straight. I don't think Texas is any less desirable. There's still Fortune 500 companies moving here in droves, but yeah, you saw them back. Go ahead.
Here's the numbers. Okay. So you've got in 2023, you had 191,000 net domestic migrants. In 2024, that plummeted to 85,000, which was the lowest since 2018. Now, the good news is that's still a net positive migration. People are still coming to Texas, but just not as much. And why is that? Probably because, Robert, like you mentioned earlier in the show, Texas is not as affordable as it used to be. And then you're also seeing some things where people are no longer making those COVID moves anymore. So
a lot of people are moving to where they came from. A lot too.
Right.
People moved to Texas and moved to the suburbs for COVID reasons, and now life's pushing you back into the city, and you want to go back to where you were. And people are trying to go back to where they were now. Not everybody liked where they moved to.
Robert, let's talk about something local. Okay, we're talking about what neighborhoods are you seeing in the DFW area that actually are soft?
Soft. It's going to be the ones that are actually the hottest, you would think. It's Salina, it's Prosper, it's the trigger names that you would hear during COVID are now soft because they've been overbuilt. And got really expensive. Go ahead.
Okay, tell people where Prosper is though. Prosper's up north, way up north.
So got Dallas, and then you have the new mecca of Frisco above it. Prosper's just above that. And I would say it's about...
So those are soft.
It's soft because it's pretty far out. But the way Dallas has expanded it's expanded north. So it wasn't that way.
Before the show, I pulled up Realtor.com. I did a search and I looked Prosper. And my definition of is it soft is if I see a bunch of dots on the map of for sale listing, and then I see a bunch of arrows going down, which indicate there's been a lot of price reductions. So again, another tip, if you're a buyer and you're looking for a deal, then go to Realtor.com, go to some website, zoom in on your neighborhood, look at how many dots and look how many downward arrows on the dots. That's going to give you an indication of whether that neighborhood is a buyer's market or not and whether you're going to get a deal.
Hey, if you see like that and you're not a very picky buyer and you've got a little bit of time on your hands, it doesn't hurt to go throw in a bunch of low offers to some of these sellers because you don't know what their motivation is, or they see exactly what you're seeing. They see the amount of people they're competing with. You might get that one desperate person and you might get that deal in the neighborhood that makes the most sense. And it doesn't look like it from looking at it online.
Yeah. So it's like one of my friend's grandfathers used to say, Robert, if you see a seller drowning, throw him an anchor.
Yes.
So that's
there you go.
That's the advice. That's the advice from the property desk right there, official. All right. Let's go ahead and move on to our next topic on our real estate news section. We're talking about the CPI print up. And this consumer price index, we cover CPI because it has to do with mortgage rates. April's consumer price index came out Tuesday morning, showed the slowest annual rate of inflation since 2021, which means there hasn't been a lot of signs of price hikes yet because of all this tariff stuff that's been going on. So that's good news if you're out there buying things. And yeah, the annual CPI, 2.3%. The Fed's target for CPI is generally 2%. So that's very close. Lowest expected and lowest since April of 2021. How does that affect mortgage rates? Robert, any comments on
Yeah,
CPI?
you would typically, you see the CPI coming down. That's what we've been looking for the past 3 to 4 years. And we're getting really close to their nominal rate of 2% that they want to get to. You would think that they would start talking about lowering rates. That's traditional wisdom. However, they have not done that yet. And the bond market is still pricing some kind of inflation that they're spooked about. So I feel like we're in this little spot right now where you've got lower inflation, but we're not seeing the downward movement in the bonds and in the bond market or interest rate market, I should say, that usually comes with that. So it's a little head scratching at the moment. We're going to see where we go. We're sitting at some resistance levels in the marketplace. The 4.5% on the 10-year yield, if you go look at, that's been typically the ceiling over the past 2 years. And that's coincide with about 7% interest rates on the average consumer. That's pretty high.
Which we've been at about, the last time I checked, is 6.92%, but we've been at about 7, just under 7, hair under 7 for about 2 years now. So these on a 30-year fixed rate. So these rates have not moved. I think we probably need to get down to sub 5 before we really see that spur demand in new buyers out there at affordability.
I think it's going to take some pretty serious economic pressures to get us in that point too. So I think this
may not
talking
happen.
With other agents and looking at different surveys that I've seen online, the consumer really wants to see interest rates between 5.5 to really get the housing market really booming again. I think that a lot of people understand that what we were in 2019 to 2022 was just really just an anomaly. We're not going to see the rates come back down into that 2 to 3% range. I think people can, if they could get it down to the 5.5% range, it would really stabilize the market. There's a ton of people on the sidelines that would really like to enter the market. And I think if you were to give them a 1 to 1.5% decrease, then what they've been seeing over the last 2 years, they're going to feel like they're really getting a deal.
So I think the takeaway here is CPI inflation does play a role into mortgage rates, but there's a lot of factors that goes into kind of mortgage rates and what people are going to get on a 30-year fixed. And mortgage rates are most closely tied to the 10-year treasury bond, which actually rose slightly after we got the CPI news. So that's another indication of how the CPI doesn't quite factor directly. There's not a 1-for-1 ratio between inflation and the 10-year and then the 30-year. So one of the big things, again, is tariffs. Tariffs are a factor. You would think if tariffs stayed high, then that would actually cause a bad economy is what the market's pricing in. And bad economies generally mean you're going to have lower interest rates. So that would be a very good thing for mortgage rates, but bad news because if you're in a bad economy, you may not have a job to qualify for the loan at all.
It's a double-edged sword. Like you want them down, but if you get them down too far, you might not have a job anymore to go buy anything. So there's a balance there. And that's why I think the 5.5 range is you can get 3 or 4 interest rate cuts by the Fed. That would get you there. And if we could just have maybe a softening economy and not so much a recession, that's the best case scenario that we're looking for in the housing market to keep the amount of people employed to give us the fuel that we need for the housing market to go back up.
And by the way, if you have some savings, okay, you like higher rates because I love getting 4.25 on a bond or in a money market account or something like that. So there's not a bad thing to having rates being slightly elevated. You're going to get some decent savings, especially if you really believe CPI is 2%. So if you can get 4.75 on a money market fund or whatever, then you can, and inflation is really only running about 2%. You're getting a real return of about 2.5%. So that's not a terrible deal. All right, we're going to keep an eye on mortgage rates as always. That's going to be a running theme throughout real estate because that drives a lot. So we'll update on that and continue to analyze that in later shows. But that brings us to our next section of the show. This is called our Let's Get Legal section. Again, as an attorney, I'm uniquely qualified to talk about this. We do a lot of this on the weekly docket over at the law firm. On that show, we're not going to do so much of that on the real estate show here at Property Desk, but we are going to try to do at least one question. Robert, this is an interesting thing. It talks about buyer's agents. I want to get your opinion on it first.
Okay.
Let me get the facts out of the way.
Sure.
Which is the facts. The facts are you're a buyer's agent. You're representing a buyer. You show your buyer a house and you just casually leave some feedback. Are you still allowed to do that? Is there on showing time? Can you leave feedback for the
Oh yeah,
seller?
it's
Does it allow
definitely
that anymore,
encouraged.
Robert?
Very encouraged. Yeah,
Yeah.
it's very helpful to, as a listing agent, to know what the buyers are thinking and what the
Okay.
agents are saying themselves too, just to give you the feedback to try to help you sell the house. I've used it as a listing
Okay.
agent,
Well,
so I like when buyers give me the feedback still.
okay, so here's what happened. Here are the alleged facts. So the buyer's agent leaves some feedback, something benign. Okay, yeah, my buyers like the house, but the paint colors were hideous. So it turns out the buyers later made an offer on the house. It was some very hotly contested, tense negotiations, a lot of back and forth between the seller and the buyer's agent, the seller's agent and the buyer's agent. They get a deal done. They go to closing. They do a roundtable closing, which, by the way, Robert, is always a terrible idea. Never do a roundtable
Never
closing.
do that.
And this is an example why you don't want people, the seller and the buyer, in a room at the same time talking to each other.
I'm surprised.
They do a
That.
round.
What title company was this?
They'll do it. They did a roundtable closing. Always a terrible idea. And the seller happens to mention, we really are happy with the price and we're glad you're buying our house, but we were really nasty during those negotiations because your agent put down that they thought our paint colors were hideous, and that really insulted us. So we really were tough in those negotiations. So the buyer gets mad, walks out of the closing, promptly files a lawsuit against their buyer's agent for breach of fiduciary duty for leaving the feedback. So what do you think, Robert? Good case, bad case? Does it terrify you as a realtor?
Not one bit. This sounds, for lack of a better word, just as a Karen. This is just somebody who's just going insane, wants to be the tough person. I can't imagine this really getting to the majority of the public. In fact,
okay, so you're going to continue to leave
so.
You're going to continue to leave feedback. You're not going to have a problem.
Oh yeah, I'll leave feedback. And in fact, a lot of times when I tell my sellers they need to change a paint color and they like it too much, they want to keep it, and I get the feedback that says their paint color is hideous, I almost want to put it in their face and be like, look, I tried to tell you, you need to be neutral.
That hot pink room where you kept all the sex toys. Okay. That needs to be changed.
It wasn't the greatest idea. Not everybody has that flavor.
Take out the sex toys, paint the room a neutral color. All right. That's what Robert has to routinely tell his clients. But
so a lot of times it helps to having the other agents and their buyers to really help push your narrative that you're trying to give to your clients. I agree.
There you go. From a legal standpoint, I think it's a really bad case. Like so many things under the law, it does depend on the facts. If I were representing the realtor that's a defendant against the buyer suing them and I were the attorney, I would have an expert on the stand, just like you, Robert, and talk about how feedback is a good thing and how it's a normal thing. And I'd also sometimes it could be a strategy. Maybe the buyer's agent wanted to leave feedback to beat their house up a little bit so he could come in lower with an offer so they knew that their house wasn't the house they thought it was. So it could be a very good strategy. This case does not scare us at Silberman Realty. If you're an agent out there for Silberman Realty, feel free to leave feedback. We think it's a good thing. This one's all about the hype and not about the law. All right, that brings our show to a close. I've been your host, Phil Silberman. Robert Vernon has been my very gracious and willing co-host. Like us, follow us, review us wherever you get your podcast. And as a reminder, nothing in this show is to be considered legal advice or investment advice. And this has all been for entertainment purposes only. If you have a question about real estate or something you'd like us to talk about or cover or answer, email us at info@silbermanrealty.com. That's SILB like boy, ERMAN realty.com. Tell us you want it publicly answered in the podcast. Everybody have a great rest of your week and weekend. Bye, everybody.